Big news, spot Bitcoin ETFs are now live. If you're interested in finding out whether you should be investing in a Bitcoin ETF, I'm going to cover that in this video, as well as talking about some of the different Bitcoin ETFs that you can select from and what you'd want to look at when choosing Bitcoin ETFs and ETFs in general. Welcome back. This is episode 185. I hope that your 2024 is still going well. And you may have heard the news that on January 10th, which is also my birthday, the Securities and Exchange Commission approved 11 Bitcoin spot ETFs. And this is big news because now you can invest in Bitcoin through a brokerage account. And I'd like to talk about what that means for you, how you can invest in it, and what to look out for. If one of your resolutions is about getting a plan in place for retirement, then consider signing up for my online self-paced retirement planning course. It has over 7 hours of video lessons with yours truly, as well as helpful checklists to help implement what you learn. And I'm still offering a 25% discount on the course if you sign up by February 1st. Just use the code RETIRE25. Head over to retirewithryan.com/on-demand to learn more, and I'll put a link below in the show notes for that. So first of all, what is Bitcoin? Let's start with that. Bitcoin is a digital currency not controlled by any government, and in case you've been living under a rock for roughly the last 14 years, you've probably heard of it. It's been around since January of 2009, and it's estimated to have a market value of $8.2 billion. $812 billion. To compare that with the stock market, just the S&P 500, that's the 500 largest companies in the U.S., has a market value of $40 trillion, 40 trillion. So that's the value of all the stocks in the S&P 500 if you added all those companies together. So obviously Bitcoin is still very, very small. There are about 19 million Bitcoins in existence, and new coins are mined each day. Only 21 million coins in total can ever be mined of Bitcoin. So it's definitely a finite resource. And depending upon what you read, it's estimated by about the year 2140, Bitcoin will be no longer be mined. And Bitcoin's also essentially untrackable by the government, which is why it's popular among large multinational drug dealers, other criminals who use it to transact through their illicit business. So it could be another way to launder money. So Bitcoin was originally designed to allow for small online transactions. And supposedly one of the first transactions ever made in Bitcoin, somebody bought a pizza. I'm sure they wish they could get all those Bitcoins back. And it's believed that its unique blockchain technology of processing payments would revolutionize the banking industry, but that is yet to be seen due to its high cost and cumbersome payment process. Normally, to invest in it, you need to buy it through a crypto broker or a crypto exchange, and this is different than a stockbroker who's selling stocks and bonds and mutual funds. And when you do buy it, traditional route that is, you then have to track your Bitcoin and keep track of your private keys. That's to prove your ownership if you ever want to sell it down the road and to prevent against someone stealing your Bitcoin. And there's been many stories of people losing these keys, these encrypted codes, and once you lose that, your Bitcoin is lost forever. So because of that, there's been a lot of fraud, and recently there was a major fraud on one of the crypto exchanges, FTX. That's really the most notable, and there's been problems with other exchanges as well. So because of this added complication, a lot of people have stayed away from investing in it because it hasn't been accessible through most traditional stock brokerage accounts, stock brokerage firms. However, with the approval of these spot Bitcoin ETFs that track Bitcoin, that has all changed. So what does this mean? This means that you can now invest in Bitcoin through many traditional brokerage accounts. And I've talked in the past about the 3 largest discount brokers, Schwab, Fidelity, and Vanguard. And there are a lot of other brokers that you can work with. Some of them discount, some of them not. Currently, you can buy a Bitcoin ETF through both Schwab and Fidelity if you have an existing brokerage account with one of those firms, or you could open an account. However, I've been reading that Vanguard is currently not allowing trading in Bitcoin ETFs just yet. Maybe that will change. But before you run out and buy a Bitcoin ETF, there's definitely some things that you need to know. The SEC approved the use of what is known as a spot Bitcoin, SPOT Bitcoin ETF. And these ETFs track the price of Bitcoin, and they own physical Bitcoin. So if you buy into one of these ETFs, they're forced to buy the physical Bitcoin. And these Bitcoin ETFs trade during stock market hours, which generally the stock market is open from 9:30 a.m. to 4 p.m., Monday through Friday, excluding the 10 major stock market holidays where the stock market's closed, and there's also some half days there as well. However, Bitcoin traditionally trades 24/7. Unlike major stock market exchanges. That's been one of the challenges with trading Bitcoin, is that it's trading all the time, whereas stocks don't trade over the weekend and they really don't trade at night. So this is a drawback of owning a Bitcoin ETF, this reduced liquidity that you won't have if you invest through a Bitcoin ETF. And there could be a big swing in the price of Bitcoin over the weekend, for example, and maybe you want to get out of your Bitcoin, or you want to buy into it. Well, unfortunately, you can't do anything until the stock market opens on Monday. And this could be even more problematic over a holiday weekend. And we saw this in the first weekend that Bitcoin opened. It was a long weekend. It was the Martin Luther King weekend, so the stock market was closed on Monday. And over that weekend, the price of Bitcoin was going down. And unfortunately, you couldn't sell your Bitcoin if you wanted to if you had bought a Bitcoin ETF, that is, until the market opened on Tuesday. Another issue that I mentioned earlier is there is a finite supply of Bitcoin. And its original purpose, as I said earlier, was to facilitate online transactions. However, with these ETFs entering the mix and buying up more Bitcoin, this is most likely going to lessen the supply of Bitcoin even more. And it's unclear how this will play out. This could be good for Bitcoin, it could drive the price higher, or it could be bad for Bitcoin. So what are these Bitcoin ETFs? Well, as I mentioned, the SEC approved 11 Bitcoin spot ETFs. Why 11? Competition. A lot of companies want to get in on this business. And in case you're not familiar with an ETF, ETF is a type of mutual fund that is an abbreviation for exchange traded fund. And it's a mutual fund that trades on an exchange. Most mutual funds don't trade on an exchange. With most mutual funds, you have to put in your buy or sell order before the stock market or bond market closes, which is usually at 4 p.m. And then once the market closes, whatever you're buying or selling, the price of that mutual fund is then calculated based on the closing price of the underlying investments. So you have a limitation of only being able to buy or sell a mutual fund once per day after the market closes. With an ETF, that's not the case. ETFs trade in real time. They're trading throughout the stock market hours of 9:30 to 4 o'clock. So you have added liquidity and more price discovery. So as Bitcoin is trading throughout the day, these spot Bitcoin ETFs will also move in relation to Bitcoin, and their price will reflect the price of Bitcoin. So if you want to buy a Bitcoin ETF, which one do you buy? When buying an ETF, there's really three things that I encourage clients to look for, and you should consider the same thing too. The first thing to look at is trade volume. That means you want to buy an ETF that has a lot of trading in it. That way, there's a lot of price discovery in the ETF, and when you want to sell it, you can easily do so. If you buy an ETF that has a low trading volume, you might not have very good price on it, as well as there might not be enough liquidity when you want to get out of it. The second thing you want to look for is the spread. Every ETF has what's known as a spread. That is the difference between the bid and the ask price. The bid price is what someone is willing to pay for your ETF. And the ask price is what someone is willing to sell their ETF to you for. The ask price is usually always higher than the bid price. And the difference between these two prices is what's known as the spread. And usually that's a few cents for most stocks and ETFs. For lesser traded ETFs, that can be even larger. And what you really want to look for is ETFs that have a narrow spread. That way, when you're completing a transaction, you're giving up a minimal amount of your money through this transaction cost. Again, there's always going to be a difference between the bid and the ask. The last thing you want to look at if you're buying an ETF is what the annual cost or the annual expense ratio is in the ETF. So that's the annual fee that's coming out of your ETF on an annual basis. So you'd want to find an ETF that had a relatively low annual cost in relation to its competitors without sacrificing either too much in trade volume or bid-ask spread. You don't want to buy the lowest cost ETF if for some reason it had a very large spread or didn't have a lot of trade volume. Now, since I'm recording this a couple weeks after these ETFs have gone live, these spot Bitcoin ETFs, there's not a lot of trade history on these ETFs. So I would just say with the limited amount of information that I have and everyone has, if you're thinking this will be a longer term investment in Bitcoin, then I would lean more towards a lower cost spot Bitcoin ETF. If you're going to be trading more frequently, then you might want to focus on one with larger trade volume and more of a tight bid-ask spread. So a few of the more popular ones that are, well, I should say, as far as the list of 11 that you can select from, a couple you can consider. One is BlackRock's Bitcoin ETF. The symbol is IBIT. It has a 0.25 annual expense ratio, which is lowest among the Bitcoin ETFs so far, of which BlackRock is actually waiving that expense ratio for the first 12 months. So that you wouldn't have to pay anything for the first year to own this, and that could be one option. Another one is Fidelity's Bitcoin ETF. That symbol is FBTC. That has a similar expense ratio. From the research I did, I couldn't tell if Fidelity was waiving that fee or not. But these are two of the largest Bitcoin ETFs right now as far as flows that have gone into these funds, and they both have very similar expense ratio. So as always, you should do your own research. Anytime you're buying these Bitcoin ETFs, one thing that we've seen is that there's been a tremendous flow out of the grayscale Bitcoin ETF, which has one of the highest fees, about 1.5%. So if you do own that, you could consider switching into one of these lower cost funds. The one thing you'd have to consider is whether or not this is going to create any taxes for you. If it's in a retirement account, it's easy to do. But if you've owned the grayscale ETF in a non-retirement account, then you might have to consider what taxes you'd have to pay for this exchange. So next, what should you look out for, right, if you're considering investing in these spot Bitcoin ETFs? So back to my original question. Should you buy a spot Bitcoin ETF? Anytime you make an investment, you should ask yourself the question, why? The obvious answer of making an investment is you want to make money. But I would take that a step further, and you should consider how much money you're going to make in excess of the risk-free return that currently is available to you. And right now, that would be putting your money in money market, a money market mutual fund, a bank money market, or buying a one-year CD. Both of which right now, due to our high interest rates, can pay you about a 5% annual return. Now, Bitcoin certainly offers the possibility to earn more than a 5% annual return. I mentioned a few episodes ago in my 6 market predictions for 2024 that Bitcoin gained over 150% in 2023. Much of that occurring in the fourth quarter of 2023 as the belief that the SEC would finally approve these spot Bitcoin ETFs after over 10 years of their original application, when the first people to apply were the Winklevoss twins. They're famous from the movie The Social Network. They were supposedly the original creators of Facebook, and they won a big lawsuit against Facebook and got a lot of money. And I guess they took a lot of their money and invested in Bitcoin and had pushed originally for the first Bitcoin ETF. Now, Bitcoin is still well below its all-time high of $65,000 that I believe was hit in 2001, and it's currently trading at about $42,000 as I'm recording this. And it was at $46,000 when the spot Bitcoin ETFs launched on January 10th, and as I mentioned, it's at $42,000 about a week later. It's down about 9%. Now, I'm not an early adopter of technology, I will say. I'm definitely not the first person waiting in line, to buy the latest iPhone or whatever gadget is out there. And this approach has really served my clients and most investors well by not being an early investor into certain products. There are numerous examples of Wall Street rolling out investment products at the absolute peak and investors getting burned in the process. Think the SPAC funds of 2021, The tech bubble of 2000, there were tons of new mutual fund tech funds coming out that people lost a ton of money. At the peak of oil, Goldman Sachs was rolling out oil funds, and people lost a lot of money in that in the mid 2000s. And investment fads will come and go. You don't have to be an early investor in technology to make a lot of money. And I will say that many people are advocating right now that Bitcoin is digital gold. And in recent times, people would argue that Bitcoin is act more like fool's gold. And that is the case because if you look at how Bitcoin has performed, it hasn't been a great hedge against the market. It acted during like a tech stock during the pandemic crisis, where Bitcoin plummeted with the stock market in March of that year when the pandemic first started, but gold only fell about 6%. In 2023, when the Silicon Valley Bank crisis started, Bitcoin had declined almost 20% during that time, and gold only declined 1%. So to me, I liken it to speculation. And I could be proven wrong, but time will tell if it's a fad or something here to stay. And I'm urging all my clients caution, and as well as my listeners, that if you invest in it, be prepared that you could potentially lose a lot of money. There's been such a run-up at Bitcoin, as I mentioned. I think a lot of it due to the belief that it was going to be available through these spot Bitcoin ETFs, that maybe there could be a considerable sell-off before it potentially goes higher again. So make sure you're only putting a small portion of your portfolio in it so that if it blows up, you're not hurt and it doesn't jeopardize your retirement. And I'm aware that by being early to things, you could have made a lot of money. I had a friend who mentioned Bitcoin to me in 2010, and it was around $400 a coin at that point, right? It wouldn't have been wonderful if I would have purchased it at that point, or maybe some of my listeners did, but it's very hard to hold an investment through all that time and all that volatility. And I think probably a lot of the easy money has been made in Bitcoin. I'm not saying you shouldn't invest in it, but just be aware that it might not be as easy to make money in it going forward. So be careful. And as always, I hope you found this episode helpful on understanding these spot Bitcoin ETFs. And I wish you a very healthy and prosperous 2024. And if you have a listener question and you'd like to have it considered for a future episode, head over to retirewithryan.com and click on Ask a Question. Have a great week, and I look forward to talking with you next Wednesday. Take care.